Hey, welcome back to Income Trading 101. This is your host, Eric, and today is Sunday, June the 6th, 2021. Hopefully you guys can hear me okay. This room has a lot of echo, but that being said, I wanted to take a look at definitely the two big cryptocurrencies, especially after we had this drop back in last month in May. So I definitely got banged up on it. I'm sure several of you did too. So let's just get a sense of where things are right now. We're going to start off with Bitcoin. We're also going to look at Ethereum, and I might also cover Binance, Governance Coin, and Cardano. Those would be the big four as far as market cap right now. Also with Dogecoin, not too far away from Cardano. But that being said, let's just do some Bitcoin. We're going to do our usual setup, and I can already tell you we're going to end up honing in on some Fibonacci levels just to try and get a better idea of support, resistance. Should I stay or should I go, essentially? Because I'm sure many of you, like me, have investments in these, and it just, if you can find levels and find reasons to stay in a trade, then you do. But otherwise, it's, call it what it is, exit, take your money, and be prepared to re-engage when the market looks better. All right. So obviously, we were seeing a bullish trend in Bitcoin, but we had this drop off that was significant and several days long. I remember this May the 19th day, but yeah, what a crazy couple weeks. So definitely on the daily chart, looking more bullish, but you can see, or bearish, but you can see that right now the 10-day and the 20 really aren't that far apart relative to the size of this chart. So, but right now you still have a scenario that looks bearish because all three moving averages on the daily are still in line. Let's take it down to the hourly. Have to stretch this bad boy out a bit so you can see it. So at the hourly level, we actually have a little bit of, well, I take that back. We had a little bit of convergence, but it crossed back under with these recent moves, and we have still a bearish pattern with the 60 above the 20 and above the 10. Let's take a look at an even smaller. We're going to go at the 30-minute, stretch that bad boy out a little bit too. And all of these are very close, but all in line for bullish, and that's mostly because of these two bars that happened this afternoon. And of course at the 15-minute, oh, look at that, 15-minute, we're back to bearish again with the 10 being significantly below the 20 and the 60 period. So pull this back out to the daily. We're going to look at a little bit of a MACD as well. Now, you guys know we've covered all of this before on other videos. So, but I still, like I've harped on, I have a process for doing what I do, and I want to make sure I follow that process. So we did have a bullish crossover on May the 31st with Bitcoin, seeing bullish momentum pushing higher. But again, this thing can oscillate, and I'm more interested in seeing it cross the zero line, go from being oversold to overbought, or begin to be there before I'm going to use it as a trading indicator. We'll take this down to the 1 hour, and at the 1 hour level, we still had a bullish cross that happened yesterday, June the 5th, and we haven't quite crossed the zero line, but you can see signal line is heading higher, that red line, and the MACD also has been heading higher. So let's see if that signal ends up materializing at all. At the 30-minute level, we've had two crosses below the zero line, so that's in the oversold category. And we did actually cross over with both the signal line and the MACD line earlier today, June the 6th. and now we're hanging right around that period. So, you know, this again is not an indicator because or not an indication because it could go either way. That's the problem with these indicators, is that they do lag. So we had a big on the 15-minute. We had a nice crossover on June the 5th. Also have one back here, which would have been June the 5th still. And it went ahead and crossed the zero line on the evening of June the 5th. And it's just really been oscillating back and forth since then. Sign of sideways market. I'm sure we'll see that straighten out a little bit when markets open tomorrow. Now, the main thing I really wanted to do with this Bitcoin chart, and I'm going to do it with Bitcoin as well, we're going to get rid of these moving averages and actually consider some Fibonacci retracement. And we're going to take this all the way back July of 20 until now. Trying to put it at the top of the range and pull over just so we can see where we are. So right now we are just past the 50% retracement, just below it. That actually can be a good sign. And we did have some action, some price action all the way down to the 61.8% retracement level. So these are very significant levels. If you also look, this is the same level that we saw back here on January 23rd when we had a pullback and then went higher. So it's one of those scenarios where if Bitcoin can hang in this area or even pull higher, and it's done such a good job. It's like I feel like a dad trying to encourage his child. It's like, come on, buddy, get back up. We know you fell off the bike, but you know, get up and let's do it again. It's not time to go home yet. Or is it? Anyway, you can see this line here is the 50% retracement. We've been hovering right around there recently. Arguably, you've got new resistance here at the 34,400 level, roughly 34,200. I'll draw that in just a minute, but I'd like to see Bitcoin get above this 50% retracement level. That's 36,951. I know 37,000 is an important level. Why is it an important level? In case you guys have heard that in the media and not understood, it's the 50% retracement level. So if we can't pull back above that during market hours, then we may actually be in a much longer, or entering the dreaded bear market that so many people have even considered. And actually, let's take this all the way back. I could have done that as well. I'll take this all the way back from last year, beginning of the pandemic, to where we are now. So that truly was the start of a new run. And so when you look at it that way, we actually have a little bit of difference, right? The 50, that pulled our 50% level a little bit lower. And you can see the 50% level of the full move could actually be playing as support right now. So that actually changes everything. I'm glad I expanded. And that's what makes having as much data available as you can so important, because you might do analysis and not even realize that you're not seeing the whole picture. And in that scenario, you end up making analysis that isn't necessarily as strong. And this is much stronger too, I can tell, because look, as I look back, this 50% retracement level was active here in January, and also obviously right now we seem to be bouncing around that. So when you look at 50% retracement of the full move, that's $34,405. So I actually like that a lot more. I think that's a lot more indicative. Next up is the 38.2%, which is $41,614. $41,614. So I think that's a good one on BTC. I, like so many of you, just waiting to see what's going to happen. Let's see if I mean, you just never know. Every now and then I do switch up some of my other Oh, didn't mean to get that one. Wanted that one, not the other. See if I can close this real quick. So that was not intentional. So there we go. Close this too. Close that. Remove. All right. And this is part of what I love about TradingView, is that they do have so many built-in, already a number of built-in strategies that you can use to just take a look at markets. So I don't have to go and code up everything that I've ever heard of into my own unique strategies, because they already have it, right? I'm looking, I like to compare the Keltner and the Bollinger Bands too, oftentimes called the squeeze, and that squeeze is actually programmed in here already too. So very interesting. This little crossover right now, it looks like we're entering a phase where we might be seeing the Bollinger Band fall inside of a Keltner band. It's a very powerful thing, so we'll have to keep an eye on that. Kind of curious how the 1 hour looks with regards to that. Yeah, close. We'll see. It appears there might be a squeeze coming, which tends to signify sort of slowing down of markets, like it's building up energy, getting ready to explode, and we'll see to which side it's going to explode. Hopefully to the upside, not the down. But that being said, there's going to be a lot more to come on these markets. Before we just exit off of this, I do want to pull up Ethereum here as well and just lay them on top of one another. So you can see how much more, let's see. Yeah, Bitcoin started to flatten out, whereas Ethereum really took off quite a bit and outperformed in many regards. But yeah, I mean, obviously Ethereum's had a strong, this was Ethereum going basically from 2,000 to 4,000, doubling in price in a matter of like a couple of weeks before it came on off. So let's go ahead and move over to take a look at Ethereum. Yeah. So expand that on out. Nope. This is not what I wanted. Sorry about that. Every now and then I get some of the symbols in my mind. That Bitcoin symbol was on my mind. Sorry. So here we go. That looks better. Trading around $2,700, a little more than $2,700 right now in Ethereum. Obviously, you see the dreaded drop that happened. Let's go ahead and do a little analysis on this one too. And actually, that may have been part of the reason why that comparison with Bitcoin looked so off just a little bit ago. There you go. I mean, we definitely had an outperformance of Ethereum over BTC. Now we have this is BTC in the orange. Just a little comparison. Like, I really like to look for periods where they seem to be rising and falling together, like we had in March and in April, and then pulled off. But what happened is you saw a separation at the end of April where Ethereum just went for it, right? And then they both came off and now are kind of trailing. I've mentioned to a few folks, I think pairs trading can be so valuable. We're always looking, as traders, we're always looking for a sign or something that could be an indication of what's about to happen in one coin or the next, or one asset or the next. And so being able to use a pair situation can be very valuable. So let's go ahead and do a little analysis on this as well. Start off with some moving averages. Some people have asked me, why do I use simple? Why don't I use exponential? Because and it really is just a preference, what you want to see. The exponential is a true average. I'm sorry, the simple is a true average, whereas the exponential puts more weight on recent pricing. And there's a case to be made for both of those. So it just depends. I do use in the MACD uses an exponential weighted moving average. And so I do end up using it. I just don't use it here on these charts. So let's get into this. So right now we're looking bearish. Still, you've got the 60 period, 60 day is higher than the 20, which is higher than the 10. So that is a bearish signal. However, I already know when we take this to the lower, we're going to see something different. So the lower right now, you've got some convergence between the 10 and the 20, but the 10 is still slightly higher on the 1 hour than the 20, and both are higher than the 60. So that is actually a bullish sign. Let's take a look at the 30 minute. 30 minute, we've got convergence because the 20 period is higher than the 10 by about $3. So I expect those to go back and forth for a little bit, but if we get another strong up bar, then that'll resolve that one pretty quickly. And then the 15 minute is oddly enough looking bearish, even though you had a really strong up bar there. But this is really going to be easily affected by the markets. We could have a string of up periods and up bars, and that'll change this from bearish to bullish, but it is bearish right now. Let's go back to the daily and take a look at our MACD. Let me get rid of our moving averages as well. And as you guys will see, so much of this is very similar. Like when I'm looking at one crypto versus the next, a lot of it ends up being very similar. So we had a nice sell-off here, or not a nice sell-off, we had a nice indication, but I'm sure we all were feeling that one before, so it wasn't early enough to catch it. And then we've had a bullish crossover here in the last few days. So on June the 3rd, it hasn't crossed over the 0 line yet, but certainly something to keep an eye on. Let's take this down to the 1 hour. So 1 hour had a bullish crossover yesterday, and it did cross the 0 line, even though prices haven't moved that much. I guess they have. It's just all scale, right? Prices are moving, so we got the bullish one, and I expect if it goes sideways or higher, this little crossover here will not be relevant. Certainly, if we saw the MACD, the blue line, and the red, the signal line, go back negative, that would be something to keep your eye on in the 1 hour. So here we are. We had in the 30 minute, we had a bullish crossover yesterday and a bearish one today, which seems like it's about to head higher too. But again, it's with the lower time frames, it definitely can be kind of touch and go. All it takes is a few bars to cross it. So we had a bearish crossover earlier today, but already looks like it might be heading back bullish because we had a bullish crossover here a few hours ago, not long ago at all. And we'll see if that crosses into the 0 territory. But overall, I say this MACD isn't giving us really enough to be able to make any good trading decisions from. I do like this here, drawing this little channel here. Slightly upward channel that we're seeing in the 15-minute, and I'm keenly aware of the fact that because I own Ethereum, I have a strong bias to the upside, right? And so we all have to be aware of that for ourselves, because it will skew what you see, right? Like, it'll skew what you see completely. You're like, oh, definitely, this thing is going higher. This thing is going higher. And, you know, it may actually be teeing up to go lower. So we're going to go ahead and do like we did with the Bitcoin and do a full Fibonacci retracement all the way back to this part back here in March, pre-pandemic. So let's click on this, go to the very tip top, pull this over, just see where we are right now. So yeah, nope, don't want that. There we go. All right, so right now, so this is interesting, right? In Ethereum, we see how Ethereum, so this line down here is actually the 50% retracement. And it really did kind of bounce. It went below. It went all the way to 61.8, which is also what we saw in Bitcoin. But it did pull back up to closer to the 50. And now we're actually in Ethereum hovering around the 38.2. That is huge, right? This thing is coming back more so than Bitcoin right now. We've got $22,709 as our 38.2% retracement. You could see this thing push easily all the way up to 33, which would be the 23.6. So definitely reason to be bullish Ethereum. I love the look of that, and chances are if there's enough strength in Ethereum, investors will also pull up Bitcoin. So these are so similar, obviously, and it's definitely worth keeping an eye on, just pulling that on higher. So yeah, we're just about there. We're 50 bucks away, $55 away from the 38.2% retracement. So nice work, Ethereum. Again, I told you guys I'm an owner, so I'm playing the role of cheerleader, which could be detrimental for my trading. But it's good to at least know that, right? Let's see. Be right around 2,700 there. I'm sorry. Right around 2904. So maybe as we have this kind of triangle thing, maybe what we'll end up seeing is if this continues to edge higher, if we get upwards closer to 2,900, maybe even 3,000, I think it might be a good case scenario for the bulls to get on back in and push this thing higher. Again, I don't believe these rallies are done by any means, especially you had such a strong pullback. Nothing goes directly up, and so my hope right now, and I hate trading. Don't trade on hope, right? Hope costs a lot of people their trading accounts. But that being said, I am expecting / hoping these prices to push higher here in the next few weeks and few months. So, but that's it. We'll get more data. You know, every minute we get more data, and so you end up deciding or figuring out whether your scenario of market events is playing out like you thought it would or not playing out at all. You just have to be honest with yourself if you're losing money or if you're winning. You know, when you're making money and you're counting those profits and high-fiving yourself, you also have to make sure that, you know, you're at a top or get a sense of how much more this could end up moving just so that you don't end up making a bad mistake. So I hope you guys enjoy this video. Thank you for watching. Definitely hit the subscribe button if you haven't already. I really appreciate those of you who have already subscribed to the channel. Thanks for commenting as well. And I'll take another look. I'm going to wait a little later and take a look at Cardano and the Binance governance. Those are the next two in line. And I'm going to wait a little bit, maybe eat a little dinner or something, and I'll come back with another video. So thank you guys so much for watching, and happy trading.